Crypto sentiment apocalypse is upon us. Today we're going to break it down for you. What is happening in the markets? You don't want to miss it. Let's just get right into it. I do want to thank our sponsor, and that's Tangem. This is actually the time to go into self-custody, guys, because if you're in a bear market, you want to lock this up into self-custody, and the way you can do it is jump over to tangem.com. We have a pretty special deal for you, and that is their Black Friday program has started today, so you can get this through December the 9th. And it also stacks the discount. So you get our discount plus the additional 20% off and a $10 Bitcoin reward. So check it out. Make sure and go take part of this Black Friday program. Use the codes down below. It's going to get you into the program. Let's get into a couple of points today. Crypto markets faced a brutal retest overnight, especially as liquidations now surpass 2 billion. When you look at this being the second hit that we've seen so far, Bitcoin, of course, plunged 10% on the day, falling as low as 81.50. And you look at CoinGlass, 2.2 billion in positions were also affecting more than 400,000 traders. So a lot of people out there in pain right now as we go into what many could think a bear market. Let me know if you guys think that's the case. Are we in a bear market? Drop a comment down below. Have we entered it? And will it be a short one or a long one as we start to go into 2026? If you look at the crypto fear and greed index, this is the lowest it has ever been. This is no man's land. And it's really unknown as to what it would take to come back out of this. Now, there's a lot of catalysts that have failed over the last really 2 to 3 weeks that we thought would already be in place by the year end. And now we're dealing with not only economic uncertainty, but uncertainty around the Fed, uncertainty around tariffs, uncertainty around where the economy is going, jobs, you name it. The perfect storm is definitely here. Even CNN, Fear and Greed, also holding at 10, which is extremely bad. 1 year ago, we were at a 56. Right there, guys, 56. So compare that to where we are today. I want to go to a clip. This first clip we're going to play is the sentiment of the market. Take a look.
Crypto's over, it's finished.
Total crypto market cap is down 8.16%.
Many people are like, oh my gosh, ETFs don't work.
It all started because of a software bug on one major crypto exchange.
I think that we could see it as low as 60.
Your favorite coins are going to die.
You don't need to look much further than DOT.
The market is going to crash 90% after November 22nd.
Here's where the fuck I'm at today with XRP. Still tanking.
No. Wait.
Why is XRP not at $10? Why is it not at $1,000?
All manipulation.
XRP Army, listen up right now. It's game time.
Are Bitcoiners really starting to buy XRP? Wall Street stamp of approval.
Buy. I'll buy. Before you hit that sell button, send it to me. I'll cash app you.
All right, as you can see, a little bit over the top there, but I think a lot of people in a position right now where they're trying to figure out why they didn't take profits, why they weren't taking profits on the way up or even on the way down in some cases. And this is where the market is today. Now, you might be saying, this is really not a big issue. I'm looking at long-term holding here. This is something, if you're kind of in the short-term game, then yeah, you're toast. But if you're in a long-term game, and you listen to Raoul Pal talk about this, you might go with a little more comfort. Take a look.
And it just staggers me. It staggers me because you've all lost your shit. You're throwing poo at each other. The fear and greed index is absolutely shockingly low. It's almost unheard of. And all it's been doing is doing the same old shit. And it always does this. In 2024, same correction. And you guys were losing your fucking shit back then as well. You're all losing your fucking shit. I mean, it's unbelievable to see what is going on out there. Take a step back and buy the fucking dip if you can. You should be begging anybody for money right now on the streets. Maybe if you can play guitar and even do one of those stupid bloody statue things. I put some in week before last at higher prices.
I bought some at higher prices. With that, you also have to look at what Ryan Sean Adams had, which if you had bought and continued to buy Bitcoin and ETH at times of extreme fear and sold at times of extreme greed, then obviously you're up. Yes, we understand those kinds of things. 2020 is great when you can look back. We put up this poll. Was the latest crypto drop just a bull market correction or buy the dip opportunity or the start of a bear market? Guys, I think, unfortunately, this is the beginning of a bear market. Now, the real question is, how long does it last? Is it a short-term bear market? There are a lot of catalysts that could compound and completely reverse something like this. But right now, the amount of problems that we're going into by the end of 2026 and early 2026 and maybe even to Q2 of 2026 are stacking up against the market in general. And I'm not talking about just the crypto market. I'm talking about the S&P 500, what that's going to look like. So right now, I would consider either one, looking at long-term holding, which is really the vision I look at. This is a time horizon situation, as it is in most investing markets. One thing you can count on, for sure, is that fiat will be the one to stay out of. Whether you get into gold, whether you get into Bitcoin, other assets that can go in this direction, even if you go into some of the stocks and bonds out there to secure up some of your positions, the point is that long term, and when I say long term, 3 to 7 years, that's the range that I always look at, 3, 5, 7. That's a typical range of which I've done in VC investing and angel investing. Those are typically the opportunities that start to get you in a position to where you can sell. Problem is that a lot of people do not take profits, and that's the biggest issue of all. Let's go to another clip here, because this is where Scott Bessent starts to break down how the economy is doing. It doesn't look good. Take a look.
So there was a lot of good economic news out there today.
So, I would believe that the Fed should be looking at the data and thinking things could, we don't know where things are. We've been cutting, and we should finish the cutting cycle or keep going with the cutting cycle.
When will young people who seem persistently pessimistic, when do you think they will begin to see the benefits?
I actually brought this to show you and your viewers today. This is the first rare earth magnet made in the United States in 25 years, 800 construction jobs. I am very optimistic about the first, second, and accelerating into the third quarter in terms of growth. We are going back to Trump-style growth.
Man, that was painful. First of all, I feel for Scott Bessent in the sense that he can't get out a message to a friendly interviewer around where the economy is. That concerns me when that is the Secretary of Treasury that is in a position that doesn't understand where the economic conditions are in the U.S. right now and why we are seeing these unstable scenarios play out. And I think it boils down to a real core element, and that is, of course, going to be global liquidity, the sentiment that we've already started to see brewing over months, if not over the last year, and that is really around the core economy. All of this eventually fades up into businesses, investment advisors, and then obviously even into institutional capital. The S&P 500 is down 5% from its record high, and bubble callers are now in full swing. You look at that, and I think the key here, even though NVIDIA ran away with earnings in terms of a good thing, can you imagine where the market would be had NVIDIA not actually posted good earnings? That is the kind of tightrope that we're walking, and really, in consideration, a very, very delicate scenario, because right now NVIDIA running annualized revenue of $200 billion with a forward PE that's lower than Walmart. So imagine that, guys, lower than Walmart. That's a big statement. I want to go to another clip here because this is where Tom Lee goes into, and this is getting into Ethereum. And though I am a fan of Tom Lee, I'm not a fan of his bullishness at certain times, but his statements here concerned me a little bit. Take a look.
I think it was October 6th or 7th. Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names.
I want to go back to this point, Tom. I hate the term glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is not kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found, and you said it, leverage is what's dangerous. And
all right, so from that statement that Tom was making, first of all, I was a little bit taken back by his analysis on it. And I think someone that does understand, you have to remember, Tom was not necessarily early to Ethereum. He was early somewhat to Bitcoin, at least for Wall Street standards. But his understanding of where this market is, I think, is completely off. Now, Jan Van Eck, I think, is actually more in line. And he actually stated it here in this tweet. I'm itching to join Sully. That was the interviewer there on that clip there. 3 things matter to Bitcoin: global liquidity. Number one, really, that's all that matters, is global liquidity. Crypto ecosystem liquidity and on-chain activity, not as much. It is global liquidity, which all translates to that. And I think this is the problem, because really the question for Tom Lee is how long can BMNR hold? Because his position right now is serious. And how this plays out over the next few weeks into the end of the year and possibly into the Fed decision on December the 10th is going to be critical. All right, so here's a tweet right here that kind of breaks it down. This is Flood, more of a Bitcoin guy, but he's talking about BMNR sitting on $3.1 billion in unrealized loss on ETH. And this is the FUD that we're starting to see move into the market. And this is the time when you're going to see the kind of scenario that we are seeing right now. The real question is do we see another major leg down on Bitcoin? Because we could see a sub 80K Bitcoin quickly. And of course, that part starts to put a lot of pressure on MicroStrategy. Others, if you look at back to Ethereum, here's the average price right now for ETH treasury companies. And that is, of course, BitDigital. You can kind of see Sharplink Gaming, NASDAQ, BTCS, ETHZilla, the ETH Machine, even BitMine setting at around 39. We don't know for sure if that number is accurate, because I've seen numbers also around 3,600. But this will start to get very, very critical should we start to see things like activist investors or any of those kind of things that play around in this. A couple of points right here. He bought ETH at a local near all-time highs because the market gave him the facility to do that at the time. At the bottom, he could likely have come close to acquiring the same amount of ETH supply. The way DATs work is they get to buy more when the price's underlying asset is going up, generally. Second and third tier DATs probably get blown out in a bear market. And then if we do get activist investors that could try to force them to sell, but don't be surprised when most of those don't. I think this is the thing where conviction will play into this for Tom Lee and for the key investors within BMNR. But digital asset treasury may be on a very short rope going in. Other news that hit, and this is on the Bitcoin camp, is that Michael Saylor's strategy now facing NASDAQ and MSCI delisting as MicroStrategy stock drops 57%. So there's a possibility where we could start to see some pressure on MicroStrategy as well. The real question is when and where and if Michael Saylor would be put in the same kind of boat. And if you kind of compare Saylor and Tom Lee, because that's really the two competitors when you think about these two tokens, Tom Lee should have been in a better position to answer these questions and maybe give the market a little bit of calmness of understanding where Ethereum could go, where are the opportunities. He didn't even mention that there's a major upgrade coming, which is happening in the next couple of weeks. Didn't mention that there are so many catalysts that have been underperforming, and we're still in a position where reality is we're close to a 3K ETH. So there was a lot of opportunity there that I think he missed. MicroStrategy's Bitcoin position is almost red. Bitcoin just extended its decline to around 80,500, just $6,000 away from an entry of 74.3 or 74.4. So It does put a little pressure on MicroStrategy. Just 46 days ago, MicroStrategy also, the position was up 70%. So you look at that in comparison to where we are now, big turnaround on the MicroStrategy position overall. One other thing I want to hit on, of course, is whether or not Michael Saylor was trolling or not on that first Titanic. If you guys probably saw that video or that post, and he recorrected that and just simply said, endure, even though these guys look like they're a little upset at the whole situation. Let's go into one more thing I want to hit on, and this, of course, is whether there is a future in digital asset treasuries. Take a look.
The interest in the DATs just like completely dried up, and now the DATs are selling, right? And so we've seen since we had that kind of deleveraging event, what it was 3 weeks ago or so, there's been basically constant sell pressure. And I think Tushar from Multicoin put out a tweet like, oh, it looks like, forced selling. And somebody else responded to it that was basically like, I've never seen like orderly forced selling for weeks at a time. It usually happens much quicker. It jams the market. People are trying to meet margin calls. And I agree with that point, is that what it doesn't look like right now to me is that we're having, call it forced selling. What it looks like to me is we're just having people go risk off broadly. And crypto is still just a risk asset. And the DATs are selling because they're buying back shares because they're trying to defend their share price. And they don't have any liquidity because people don't see any reason to buy the 15th ETH, DAT. And they also want to go risk off. And I think we're probably in for a pullback broadly on the equity markets and all risk assets because there's just too much happening that's, very unclear. There's just too much uncertainty from a macroeconomic perspective.
Well, I would agree with that statement, just too much uncertainty on the macroeconomic position. And he is right. I mean, most of the time they are trying to defend their share price. That is an issue overall. But one thing that is not something you should maybe consider is this statement right here. Jim Cramer, lots of good elements are lining up for a rally. I don't know if I believe that, guys. Do you trust that guy? Yes? No? Put it in the comments down below. All right, you guys know what to do. Make sure and jump into our own Diamond Circle. It's where you guys can join. Of course, it's free. Click the link down below. And of course, follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.